Boom! Hey, good morning, everybody. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. In short, it's your hour of power. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money cannot afford to lose. I wasn't sure if there was any audio. There's too many mics on this platform. Anyways, I'm looking there because that's the software. Now I'm looking there. That's where you are. Hey, there you are. So, hey, my name is Wayne McDonald. I'll be your guide on this thing we call Forex. Let me know what you want me to cover. I will do that for you. Okay, so put in the comments in the chat, and I will try to take a look at those things. I recommend gold, oil, Bitcoin, that kind of stuff. How about the stock markets? Do you want to do dollar pairs? Do you want to do yen pairs? Do you want Swissy pairs? Do you want cross pairs? Do you want exotic pairs? I don't know what you want. Let me know. I am here to serve you. So without further ado, let's get on with it. First of all, if you look in the description below the video, you will see links to resources. Many resources. Trader's Way is one of them. You need a broker. Guess what? This one is unique and special. It's a boutique, and they have a business model based on ethics. They don't trade against you. That's what an ECN is. See right there? It says ECN. That means they don't trade against you. They also value your education. They actually want you to succeed. See, a typical broker trades against you, and that's how they make their money. Trader's Way would rather you be a successful customer and client that trades profitably for years and years and years and years. Which business model do you want your service provider to have, huh? Yeah, how about a symbiotic one? Cool. So, what do you want me to cover? What do you got? What do you need? Let me know how it can help. We can do a quick update here. Boom, 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 boom. Boom, 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 boom. All right, so these are hourly charts. These are indices. So yes, I make my own indices. So I have a yen indices, CAD indices, euro indices, Aussie versus everything. So in the short run, you can see pound is still generally weak, Kiwi's still generally weak, and Swiss franc has given quite a bit back. Now, this was a very bullish trade during times of risk off. And I don't know. So anyways, it's given back. So October 7th, I think, was when Hamas attacked Israel. And that's definitely a risk-off moment. And that's in there somewhere. And so what? All that risk is gone now? Is that right? Everything's good now? We fixed everything? Well, if the answer is that probably not, then you probably want to keep looking this way. But nonetheless, that down is what has been happening, okay? So our goal is, what do you think? Is it going to continue that way? Sell the rip. You think it's going to go up? Well, you don't buy the dip. You buy the dip after the dip. The dip, rally. You only buy higher lows, okay? Bum, ba, bum, ba, bum. Any risk going on in the world? Yeah, well, we got that geopolitical risk. We have the risk of it spreading. We have the risk of the Fed surprising the market on Wednesday. We have the risk of the Treasury surprising the market on Wednesday. We have the risk of a huge revision for non-farm payrolls on Friday. So yeah, I mean, there's a lot of risk there, but let me show you why we're probably hesitating on the risk side. No, I don't want to go there. Do I want to go here? I guess we can go there. Gold, WTI. All right, S&P. Okay, we can do it this way. What's the risk? Me. Okay, so we're at the 50%. That's not it, though. Let me switch to a different version of this. Let me go to U.S. stocks and S&P in the middle here. And I basically have it set up like the other one. Let me change it and go template, pivot points monthly. Okay, and you'll see that Friday, let me do this in a different color. You'll see Friday we were at low. That's the projected low. Based on this high, this is the projected low. So we hit that low on Friday. And so you could have sort of one of these things next. So today could be a risk on day, but what? Is everything's good? Everything's good now? Everything's fixed? We're on our way here? Is that right? What do you think is likely to happen? Okay. And so to me, technical analysis still has that in the cards. Okay. And that's our current role reversal. This whole area here is the sell zone. Okay. Sure know what I'm talking about? Yeah. So be careful of that, but that's why there's hesitation there. Okay, you want to look at the no diggity, no Dow. Dow actually made it through. Remember, it was caught up on that support. Luckily, I'm hedged. But notice the same thing as the S&P 500. Okay, completely different asset, completely different prices, precisely the same sell zone, precisely the same take profit zone, and precisely the same behavior. So one might think this way would be the next move, technical analysis wise. Okay, you want to pay attention to this zone, you want to pay attention to this zone, you want to pay attention to this zone. Okay. So you have the down, the up, the down, the up, the down, the up, the good, the bad, the negative, and the facts of life. Just ask Tootie. Okay. And then NASI has the highest vol, otherwise known as beta. Okay. Yeah. Yeah. If you really want to impress people, you do sigma squared. Yeah. All right. So, yeah. I don't have the monthlies on here, but yeah. Oh. Now you might say, well, we're at the end of the, okay. All right. Well, we'll see. A lot has to do with, like I said, Treasuries on Wednesday, Fed on Wednesday, and NFP on Friday. Cool. By the way, if you want to do the Fed meeting together on Wednesday, I think what I'll do is I'll create in the Investor Bootcamp community section, I'll create a meetup, and we can meet up there and we can watch it live together. What do you think? Smell like a plan? All hands. Video only members, swing trading members, day trading members. What do you think? Yeah? Let's do it. Right before your eyes. All right, so let's take a look. You guys are liking oil? Yeah, I'm interested. Amazing. Sky Killer, maybe we misunderstand each other. No, the Wednesday meeting is just a Fed meeting. Oh, you mean you want the portfolio construction? No, it's not an SEP week. No, meeting. It's not an SEP meeting. Okay, it's not an SEP meeting. Yeah. All right. Okay. So oil, huh? Okay. I think I'm a perma bull, by the way, just to let you know. Okay. I think that's my routine now when I meet a stranger. I'm like, hey, my name is Wayne. I'm a perma bull on oil. Okay. I think it's either going to become a problem or contribute to the problem of the world's problems. Yeah, I'm a perma bull. I see oil dropping right now, and I see it as demand destruction based on everyone right now is concerned that tensions in the Middle East is going to lead to a global recession, and China is going to come down, and the United States is going to come down, and Germany and Europe and UK are already basically negative, right? And so it's all poopy diapers, okay? And that brings everything down. Great. So once we get down, we're going to find out even then there's not enough oil. That's kind of my thread. And then, of course, if there's still not enough, even if no one's really trying to buy it, like again, let me use Cuba as an example. In Cuba, people don't have a lot of money. And the cars they have are old cars. It's just, okay, fine. But some people drive. So there's not a lot of demand for gasoline, but if you're the one demanding it, then you need it, right? But then when you go to the gas stations, they don't have gasoline. So there's not a lot of demand, but there's more demand than there is supply. Okay? Black gold, as they say in Cuba, right? Black gold. Right? So anyway, so even if demand is low, there's still no supply. So that's my concern, and so I'm a perma bull, and I think if demand ever comes back and our fears are overly pessimistic, then this goes up either way. So that's my thought anyway. So maybe I buy it. Maybe. Could be a rabbit. What else do we got? Am I doing okay? Am I hitting all the things? Okay. Boom, 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 boom. Yep, gold's still going up. Okay, and if you're going to be a bull and you believe this is going to go from 2,000 to maybe 3,000, keep riding 21, son. Okay. You want to ride your horse down the old town road until it can't go no more. I think those are the lyrics. I'm not sure. $20.75. All right, so you're not looking out that far. All right. Biddy looks bullish. The only thing that could kill this, okay, is this price here. See, if you were a bear, okay, but boy, that would have to be aggressive reversal, right? So what seems to be in play is kick it off the 5 and take it north. That's going to put an out of position trade on, and that gets you to 37, and then I think it would collapse. Okay. All right. You want to look at some other crypto? Let's do some crypto. Yo, let's do some ETH. Huh? Do you have an ething disorder? Yep. All right. Boom, bada boom, bada boom. So I already got it all marked up on the daily. As you can see, we already did all the work. So this would be the plan. Okay. Ethereum back to what? 2K? 2K and beyond. Maybe. Okay. But anyways, that would be the next level up. Okay. Richard says he was listening to a floor trader over the weekend and he's saying markets are run by algorithms. Did you really listen to one, or did you see? Funny thing is, maybe we're on the same YouTube algo. For some reason, out of the blue, I'm like, I need to not work for an hour. I worked really hard over the weekend and I needed a break. I'm like, I just need to not work for an hour. So I pulled up YouTube. I typed in free trading movies or something and got the movie Floored. Now, here's the thing. I was invited to the premiere of Floored in Las Vegas. And it's like a 1-hour documentary on floor trading, in particular the Chicago trading floors. And I was invited to speak, or not speak, sorry, to attend the movie premiere. And but I was speaking at a conference in Las Vegas, and I was on stage in front of, I don't know, a few hundred people, whatever it was. And I think it was the last speaker. And so my plan was do my thing and then leave and go watch the movie, right? I'm like, oh, movie premiere. I was so excited. I felt like a rock star, right? So anyway, so I'm on stage, everything's done. And then I get off stage and most of the audience clears out. But there was a group that always stays and they want to talk to me and ask questions. It was just normal part of being a speaker. And it was an interesting crew. It was a good young crew, young Forex traders. And I just stood and for about 45 minutes on the edge of the stage, I answered questions. And then finally I'm like, dude, we got to clear off stage here. So we walked into the chairs, and because they were breaking, the conference people were breaking down the stage. So then we were just hanging out in the chairs, and there were still about 15 of us. So we just kind of got chairs around in the circle. Meanwhile, I'm watching my watch. All right, I've missed my dinner reservations. Watch my watch. All right, well, I'm not going to make the movie premiere. And I sat there for 3 hours with this group of like 12 Forex traders. And I never got to see the movie. I saw it this weekend. And Richard's like, the markets are trading about algorithms. Yeah, dude, whatever. I didn't like the documentary at all. It was 1 hour of people complaining that you can't make money trading in the pits anymore. I'm like, yeah, well, whatever. So, yeah, it's all run by algorithms. Whatever. Why don't you run an algo then? Okay. I mean, people, what made me mad is, there's these 40-year-olds and they're like, I can never learn how to use a computer. I just can't think that way. It's wrong and inherently unethical. Like, you don't know how to use a computer. This was like in 2008, and they're like, I don't know how to run a computer. You're like, dude, you don't have to have a PhD in computers, right? Like, learn how. You know what I mean? Yeah, so what did I do? I went to Oxford, took a class on algorithmic trading. Dude, learn how. Anyways. So, obviously everyone here values education. That's why we're here. But anyways, I just thought it was a lame bullshit excuse that these grown adults used to make a lot of money trading in the pits, and now it's all over. No, adapt. We all have to adapt, right? See, if you read Darwin, his first book said survival of the fittest. And this is what you were taught in school. This is what your children were taught in school. Do you know he wrote that book when he was like 22? Then he spent the rest of his life studying biology and wrote a second book, which no one cares about because it's not famous enough. Your kids are taught what you were taught, and you were taught what your teachers were taught when they were kids, and for some reason, we read all the wrong books, and we have a really strange version of reality. So here's what I'm getting to. Darwin wrote a second book and said, it's not survival of the fittest. It's survival of the species which adapt best to changing conditions. It's not the strongest, it's not the fastest, it's not the smartest, it's not the biggest. It's the species that adapt the best. You don't adapt, you die. So this is why you should be 45 years old going back to university full time. Anyways, enough of that. We value our education, and that's why we are here. Okay? And that's why we are strong. We are stronger together, and every year we're smarter than the last. You guys with me on that? See? Block it. Okay? Probably get a little movesy. To be clear, Richard, I didn't take a class on building algorithms. I took a class on analyzing trading strategies and constructing portfolios of algorithms and adapting. And the class was also on judging. So for example, in my final examination, there was a lot of, like a typical test. Like in sample and out of sample data analysis and back testing and all this kind of stuff, right? And then you get to the written part of the exam. And Oxford asked me, read about this algorithm. Here's the trading history. Should you invest or not, and why? Write a paper. Here's the track record and history of a particular trading algorithm. Read it, analyze it, and make a recommendation. Should you invest or not, and why? Cool, right? But it's not like how to build an algo. No. I'm not a programmer, but I'm a money manager. So it's from the money management side, right? That's right, Ashish. Yeah, everything is the same, but everything is different. And that's tricky, right? So anyways, going back to ETH looks up. It looks fine. Technically, you should be able to get it, especially if you're going to follow the biddy to the upside. Okay. Let's take a look at this one. Let's go out daily, and that's where we are. And it seems to me like it's such a big, crazy move. Okay, like check this out. It was $250, and then it was $6. Okay, now it's 35. All right, so holy smokes, huh? So now you got to zoom in. And all I can tell you is it is trending up. Okay, it is trending up. This is okay. So one would say at this point, at some point, it's probably overbought. And at some point, you probably want to buy a dip. But the moves are so great, I tell you, that it's hard to catch these. So let's change the template and move it into a confluence. Wow, this is just gobbledygook because the moves are so ginormous. So we're already at a weekly top and a monthly sell pivot. It's not that it will fall, but if it double tops here, this is where this is going. From 35 to 18, or if you're going to be a bull, and remember I showed you on the higher time frame it's bullish, then you probably want to look for like a double top, lower low, lower high, back into like, let's call it 27, and then resumption of the upward trend. Yeah? XRP, Ripple, Ripple, Rippa. Okay, yeah, this thing was 28 cents, and then it was $1, then it was 38 cents, and now it's 56. Okay, I already have this marked out from the past. Okay, this seems to have been an important area. And that's where we are now. So you got to be careful because, you know, like if you look at monthly pivots, it says that if you're a bear. And, you know, you could be. Okay? You could be. Now, if you zoom in and you're like, yeah, I want the breakout. Okay, so you're fundamentally long. You are a little slow. Okay. Okay, because the way you play these things is you have the bottom. Okay. And then you have the higher low, higher high, which you got there on the smaller time frame. You see it? Okay, double bottom, higher high, higher low. That's a buy. Or you play the bigger role of this is a bottom, therefore that's your higher high, and you do the same thing. It's just a time frame issue. It's the same pattern. And so you're along there. And now what? Now you're like, Wayne, I want to wait for it to get to resistance and then buy it. Well, I've never recommended that. Ah! You're late! Okay? But nonetheless, there you go. Booyah. Do you guys trade any of this crypto? Or am I barking up the wrong tree? I think I owed this, right? What is this? I think I owned this at $2 at one time. No, it can't be. No, I'm thinking Cardano. Oops. Yeah. Like, it was never worth $2. Good. Makes me feel better. ETH versus Bitcoin. Interesting. Okay. Does anybody use Litecoin? Is any of this just dead? What do you think, Peter? Are any of these just sort of dead? Like, nobody trades Litecoin anymore, Wayne. That's just dumb. Just skip it. This one's dead? Litecoin was just so cheap for a while for trading transactions that there was always demand for it, right? So anyways, you could call that a bottom. And then you could call that the role reversal. Just a fork in Bitcoin. It just sounds so funny if you say it right. It's just a fork in Bitcoin. Oh, it's a scalper's friend? Sweet. Yeah. Well, we can look at that. I have it on the daily. Why is it a scalper's friend? Because it's cheap? So funny. You can turn a nickel into 10 cents? Yeah. All right. I mean, look, it's following some basic rules of engagement, right? Like, right? So it gapped up, okay? Made a higher high. So you're going to look left. You're going to think there, but then you're going to look into the pivots. So you got a monthly and a weekly. So you're like, all right, so probably somewhere in there. Okay, and of course it dropped down like it should. It's not very good, but you know, yeah. I mean, it's doing it. It's not great. It doesn't look like a good scalping thing. It doesn't seem to have a lot of volatility. Like you gotta remember, like back in the day, this is now where I go into my story. Back 20 years ago, right? 20 years ago, 15 years ago, when you scalped, you would make 25 to 50 pips in an hour, maybe less, probably less, half an hour. And now when I see people scalp, they make like 8 pips. And I'm like, all right, whatever. It's so anyways, I don't know. So when I look at this, I'm like, yeah, you could be scalping it, and it is following the rules of engagement, but there's not a lot of money here. Yeah, it doesn't look like a moneymaker. Right? Oh, so Wolf is like, but yeah, all right. But even on a 5-minute chart, like it's nothing, right? So, but does it follow the rules of engagement? Well, if it reverses here, you expect this to be the top. So it's following the rules and the double top here, but this move probably has to do with that Bitcoin ETF, and then it dropped into here. So would you have bought it? Like, yeah, I mean, it's tradable. Like, look at this. This is a basic trade. But again, why would you scalp this when you would just buy it and take it north? Like, that's the part I don't understand. Why would you choose to get out quickly when it's so clearly a trade that has this as a potential? Well, the only way you'd make that decision is you don't know, and it's not a decision. It's just you don't know, right? The mouse is like, oh, look, a piece of free cheese. And it's sitting on this little plate, on a little piece of wood with a big piece of metal with this tension spring on it, right? Like, the mouse doesn't know if he eats the cheese, he gets his neck broken. You just don't know. Why would you scalp this for an hour when you could be in it for 2 weeks? Like, I just don't understand the decision. And of course, it's not a decision. That's the thing, right? So anyways, excuse me. All right, so we did some crypto. Now what do you guys want to do? Give me some requests. Ask Uncle Wayne, how can I help? Yens. Okay. Okay, let's start with short-term currency indices. And yen was strong but giving back. Okay, cool. And your pig, okay, your pig is flat. So you're taking flat and slightly down. So it's already a mediocre trade, Dave. Already mediocre, but let's take a look. RC Cola's on that too. Beast, okay. So mediocrity. And so all I could tell you is bottom of the channel. this way is the only plausibility. Now, if you're a bear, that's perfectly fine, but you just can't do it now. Bears are thinking this. Bears sell high, and there is no high. Now you're like, well, what about this? Okay, and you're thinking down. No, no, no. Because you're in the middle of the range, you don't do that. What you do is wait for the pullback and then drop it. So you're in a range, you have two choices. You got two choices of what you can do. It's not a tough decision, as you can see. I can blow you away and you'll trade with me. All right, so you want to sell this. The only way to do it is have it break, have it pull back, and then sell. Oh, you want to buy it? Then you're already a little tad late, and you got that. Okay? That's that. So like I'm saying, like it's definitely not bearish now. And if this area suddenly creates a trend, that's cool. You'll catch it later. Otherwise, you're betting on it, and we don't bet. We're too smart for that. Right, Hamza? All right, so Hamza wants pound dollar. All right, so again, you go to your indices. Dollar was strong, but is currently giving back, and pound is neutral. Once again, mediocre. Okay, it's mediocre. It's not a good setup, but let's take a look. Okay, maybe it'll develop into something. Okay, so what we have on a different time frame, let's see, down, up. And so what this would be a roll this way, but not on this time frame. Probably have to go to a 4Z. Okay, and then this case, you have this is the trend. All right, so how does that work? Lower low, lower high. The problem is we're in the middle of this range, so you're relying on the moving averages to break you to the downside, or exogenous pressures. Can anyone give me an exogenous pressure example? Meanwhile, I'll continue with the technicals. Anybody on the exogenous pressures? War. Okay? Yes. All right, so if we get a bad headline, it'll probably bring the pig down. Okay? And so I just happen to have a little bit, as 50 Cent would say, little bit, happen to have a little bit on this. Okay? From last night, by the way. So last night we were down here, and I said to my broker, hey, traders, wait. Okay? If we get into this price, take it down. Take it down, take it down, I take it down. Okay? But it's not a good trade. Okay? It's a trade. Cool. Well, I think today is going to be a risk-on day out of, hey, everybody, there was, the war didn't escalate out of control over the weekend. See, it could have. See, we don't know on Friday. On Friday, we say, dude, things could truly get out of hand over the weekend while the markets are closed. So I need some insurance against that. Just in case the markets open way down because something big happened in the Middle East over the weekend. Could happen. So we wake up Sunday afternoon. Hopefully you don't wake up Sunday afternoon. The markets open Sunday afternoon, and guess what? Nothing big happened Oh yeah, people died. Yeah, life is misery. But it's not enough to kill the markets. Okay? So, what happened? Everybody takes their hedges off. Doesn't mean the risk has gone away, it just means the hedges have gone away. So, the down turns up. But one thing that amateur traders really take probably the longest to grasp. I didn't word that right. The last thing a retail trader learns, okay, how about that? Before kind of becoming more of a pro as a trader, is that green candles don't mean buyers and red candles don't mean sellers. So if green candles don't necessarily mean buyers, what could they mean? And this should blow you away, by the way. Send a ride with you if you can get me to the border. The sheriff's after me for what I did to his daughter. Anybody know? Sorry, I've been listening to Beastie Boys over the weekend. Man, they were so good and ahead of their time. Oh, my pleasure, Hamza. Anybody want to guess, though? If green candles don't necessarily mean up, then what could it mean? How about this? Type in a question mark if you're even listening. You're like, I muted this jerk like a half an hour ago. Really? Right? You're just in it for a pretty face and a smile? Well, don't listen to Belle Biv DeVoe. Never trust a big butt and a smile. Your trades are poison. Yeah. It means bears have exited. You can get green candles by bears leaving the market. Because to leave a bearish position, your brokers have to go long. Up can mean less bears. And in a bearish market, okay, let's, you have to be, let's say, fundamentally a bear. So you look at this and you're like, Wayne, I'm a bear. Good. So every single green candle on there is not a bull. What kind of loser would buy a position against something like that? Can we all agree? You'd have to be a knucklehead eating knuckle sandwiches all day and still have room for dessert to be a bull on that? So then why are there green candles? Bears are taking profit, or they're getting out, or they're whatever. They're just, there's either more bears or there are less bears. There are no bulls since this peak. Well, there might have been, but then let's say definitely by this point. Okay, let me mark 2 points. Okay, smart money started taking profit here. By the way, I've coached you and I'll teach you that I think this is Canada Day somewhere here. This is where I teach you to get out. Because I love you. You're my sweet baby. I want to care for you and take care of you and pet you and hug you. You remember that Bugs Bunny where the monster gets him? And he's like, anyways, you have to look it up. Sorry, I grew up an only child, so this is how an only child thinks, right? Bird! Squirrel! Anyways, I teach you to get out here. Every single member of Investor Bootcamp has been brainwashed to be ready right in there. That's our target date for exit. Isn't that cool? Every single member of Investor Bootcamp, especially with those that have been members for 5 years, 10 years, 15 years, 20 years. Okay? They know this. It's factual. Cool. So smart money got out around there. And then more money came out, more money came out, more money came out. And then even those that are slow as molasses on a cold Georgia morning finally got stopped out. Those are the ones that just put their stops down and they were praying for up. Please go up. So we gapped down and took out all their stops. Because they didn't have, right? They didn't have it. Whatever is needed, they didn't have. Or realistically, this is where this market technically came bearish. But this period here is where you should have at least taken profit as a bull. Okay? But since then, this moment in time, there's not a reason to buy. Now, we may have had some trades on here on smaller time frames because we were using some seasonality. For sure. Totally agree with that. But it's also failed. Okay? So, is this bullish? Nothing on this says bullish. So you got to find a way to be a bear, don't you think? And then, therefore, you drop into a smaller time frame, maybe, right? Okay. Now, the risk to this, of course, is that seasonality that we might have been playing earlier. See, October is typically an up. So typically, right, this actually would have been a great trade if it had appeared. That's actually one that I would have anticipated, but we definitely didn't get it. Okay? So that's where you're like, well, this is what we got now. Okay? Unless you like the UK economy and you're like, dude, I totally want to invest in the UK economy. 5.25% interest rates. 6.7% inflation. Wow. Okay? Anyways. Oh, yeah, you can get lost on this site. Anywho. So you can have some green candles today, but it's not necessarily people buying. It's bears taking profit because we didn't get a lot of bad news. But later on, maybe the bad news shows up later. You see? This is why you shouldn't chase candles. Remember Left Eye Lopez? Don't go chasing candles. Please stick to the trends and the charts that you used to. Yeah. I know that you will trade everything or nothing at all. But I think you're moving too fast, right? Anyways, let's take a look at the exotics. And whoa, peso. Hey, peso. Okay, peso is on the daily 21. Okay, and first level of roll reversal. Here's second level roll reversal. If you're going to use the November pivots, it looks like that, bro. Now, Tidal Wave makes a joke. He says, if you want to make money trading, just figure out what I'm doing and do the opposite. I actually tried that early in my career. I tried that, and with serious conviction. Like, I realized one day that everything I touched didn't turn to gold, it turned to lead. My timing couldn't be worse. So what I decided is, well, I must have an inverse correlation, right? So anyways, and I'm not even joking by this. I spent a period where I would spend, probably 90 minutes. It always took me about 90 minutes worth of work before I even opened up a chart. Let me say that again. I'd wake up well, actually, that's not true. I traded at night. So I would start my day by doing 90 minutes of fundamental analysis. And I would organize everything so I knew exactly which pair I wanted to buy and sell. And then I opened up a chart. So this is the way I still trade now. Right? I hope you've taken... Has everyone seen my first trading strategy? I gave you an example spreadsheet and everything. I think it's in the description. It's actually a pretty good presentation, I think. Stock trading course link, tradeplans.ai link. Yeah, 3 trading secrets. All right, let me give you this link. For those that don't know, it's actually interesting. I think it explains my methodology of trading. So let me pop that into the chat here. Sign up for this free training course. Inside, I show you how I taught myself how to trade. And as I just explained, I would spend 60 to 90 minutes doing analysis before even looking at a chart. Because back when I traded, charts and your brokerage firm were 2 different things. So you had your brokerage, right, which basically just looked like this. That's it. Okay? That's what your broker looked like. And then you would open up charts. You'd buy them. They were, I think FXCM had a deal with IntelliCharts. And I think it was, I don't know, I was going to say 250, and then I thought, nah, maybe it was only 150. So I'll say 200. It was like $200 a month for your charts. Now get a load of this. You'd look at your charts, but you couldn't trade on your charts. So you would look at this and then say, okay, I want to enter in 1785. I want to put my stop at 1730. And my limit order would be, let's say, 1850. And this is USD Mexican peso. And then you would go here, and you'd go find it, and you do your new trade. See, nobody even trades like this anymore, I don't think. Oh, yeah. Okay, USD Mexican peso. 1 lot. My price is 7. Okay, my stop. What was my stop again? And literally, it would take you 2 minutes to enter your trade. Because you'd have to type it all in. And I'm telling you, you're like, what was the price again? I want to buy at 1785. So you'd go in, all right, 1785, right? And do all this. Where's my stop? Where's my limit? All right. You'd go through it and you'd hit it. But here's the thing, and especially if you were using limit orders to get in, you would have dozens of trading orders in your trading platform, but not on your chart. So you couldn't watch. You didn't know if it was getting close, or you wouldn't know if you got in by looking at your charts. Oh my God, you can make so many mistakes. But in that training course, I'll show you what I did, and it's very similar to what I do now. I know I don't want to buy this. Doesn't mean I would sell it though. Okay? It would take a lot for me to sell this. And for many new traders, what you do is you open your charts, and usually your charts are not organized very well. And what you do is you do something like this, and you go through and you burn through all these trades and you find trades to take. Okay? And you're inconsistent. Because you see long trades today and short trades tomorrow. The problem is, if the market is inconsistent and you're inconsistent, how are you going to achieve consistent returns? Are you able to explain that? If you were to do like a 3 or 4 slide deck presentation explaining how your randomness and the market randomness will lead to consistent results, will you be able to explain that? Okay. So anyways, we got that risk on going on. It's 9 o'clock in the morning. Oh my God, I've gone too long, I think. This was your hour of power. Okay. Yeah. Is this all right? Did you have a good time today? Was it all right? Did I go too fast? Fast and furious? Too much on crypto? How do you feel? Everything okay? So anyways, going back to Tidal Wave's comment, I got to a point in my early career where I would spend an hour a day, maybe 90 minutes a day. I'd do thorough research. And at the end of 90 minutes, I'd have 3 pairs I want to buy and 3 pairs I want to sell. And then I'd open my charts, Tidal Wave, and all the ones I wanted to buy, I would sell. And all the ones I wanted to sell, I wanted to buy. Because I realized I'd do all that analysis and I was wrong a lot. So I'm like, well, at least I figured it out. I just have to do the opposite of what I think. And guess what? I still lost. I'm like, what? So I realized there was something missing. Okay? And I realized I was trading what was happening, but I had no clue on why this stuff was happening. I highly recommend you take that course or that free lecture. I'll post it here again. It's good. And it's the honest truth. This is how I learned how to trade, and that was my first quantitative trading strategy. I'll take you right through it, how I did everything on a spreadsheet back in 1999 or something. So anyways, peace on earth. May the pips be with you. May your profits be above average. Have a wonderful day. I'll see the day trading group at 4. Cheers.